What's up, y'all? Will here with Schedule Fly, and this is the Restaurant Owners Uncorked podcast brought to you by us here at Schedule Fly. Super simple, web-based restaurant employee scheduling software backed by legendary customer service and all at a low price point. We've not raised our prices in 18 years now in business. Not saying we never will, but listen, if you're on pencil and paper or Excel or Google Sheets, make life easier for everybody from the owner to the manager to the teammates who want their schedule at their fingertips all the time. That's how they roll these days. Save a lot of time, save a lot of labor. ScheduleFly has a 30-day free trial. Go to our website, schedulefly.com. Sign up for the free trial. My personal cell phone is on there. You can call me or text me. You will get me on my flip phone. It does get texts. I'm always happy to talk to you about ScheduleFly. We have a very personal touch in our business. We always have and always will. And also, if you are on another scheduling software, you very well may be paying a whole lot more money than you need to if you just need to schedule and communicate and budget your labor and keep things simple. You may not have heard about us. Give us a shot at schedulefly.com, 30-day free trial. And that is it about ScheduleFly. Now let's do Restaurant Owners Uncorked episode 600 and something now. We're getting close to 650. This is cool and different and unique and personally really rewarding because I've got two of my buddies here in studio. And guys, I want to thank you for taking the time. We have an opportunity to talk about restaurant real estate and finance, and you guys are pros, and we are so grateful to have you here. So Trey and Derek, thank you. If you would each just introduce yourselves.
Well, let me just say thank you for having us. This is, considering how long we've known each other, what a wild ride that we'd ever be sitting here. I don't know that we would have thought about it that way back then. But Trey Morgan, president of the Morgan Company, and also co-founder with Derek Copeland here to my right of Sentinel Grove Partners. So happy to be here.
Great to be here. Will, I think we've known each other 12 years, and you had the same phone back then, too. I remember sitting at the basketball games at Calvary, and you had the same phone. So that's pretty
right.
cool. But great to be here. And like Trey said, you know, we're pretty active, looking at different projects and funding and looking for good people and good real estate.
Absolutely. Well, so you guys, tell me about Sentinel Growth Partners. What does Sentinel Growth Partners do? Let's just get to the basics.
You want to take it?
Yeah, Sentinel Grove Partners, which we recently rebranded, is really a kind of a boutique, I would call it a private equity for investment firm. And, we're certainly not Morgan Stanley or Goldman Sachs by any stretch, but we're out there sourcing really good deals. Our core competency is real estate and operating businesses. So we're out there sourcing deals with our network of private accredited investors, very small but robust network. And the company was founded over a decade ago by Derek and I, almost frankly as a side business, to really kind of solve for an investment problem, which I'll let him talk about because he's much better at doing it. But we're very being small keeps us nimble. And I think some of the investments we've done over the years. So we it's been a great run.
Yeah, I think there's a group of investors that are looking for an alternative to just the public markets.
Mm-hmm.
You think about where interest rates are; that they've been low. They went up a little bit, but they're still relatively low. You get 4% on your money for a 10-year Treasury, and that's hard to make that work with inflation and cost of living and everything else. So, we look for really good cash flow producing assets, a lot of real estate. Good, strong credit tenant real estate, along with some good operators. And we've been fortunate to have a really good track record in that realm. And it starts with, really sourcing great projects, great operators, great people, and then matching it with investors who have that interest in, participate in that. So
Okay.
It's been fun.
So real estate's such a tricky piece of the restaurant business. Finding the right real estate, knowing how to negotiate a lease, getting the right landlord partner who is there to, who is on your side to help you, want you to be successful. I mean, this stuff is, you can pick the wrong landlord and things go south and you got problems. And we saw some of this during COVID, but I mean, you're on this side of this, Trey, but talk about, like, if I'm here, if I'm listening to this, I'm a restaurant owner or a franchise CEO who's growing. Talk a little bit about the right tips and tricks and steps you need to take to make sure that as you look for real estate, you're finding the right real estate. And that when you are doing due diligence on a landlord, that you're finding the right landlord. Because I think a lot of people, they have an idea, they have a concept, they want to get it open now, and they rush into something and wind up in what turns out to not be a location or turns out to be not a great landlord.
Yeah, lot to unpack on that one. But let's start with, because I think you make such a great point. You know, the old adage in real estate is location, 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 and it's all true. That is the first and most important thing, right? And that's especially for our expertise is really retail development. We've developed over, I don't know, a couple million square feet in the Southeast over the past 10 years, predominantly shopping centers. And, so location is extremely important. We can kind of unpack and dive into some different things I think your audience might be interested in from a a landlord tenant perspective. But I think you hit on something that's really important, which is landlord relationship. People talk about you negotiate a lease, and some leases are 10 pages and some are 100 pages. But a lease is only as good as the two people on either side of it, right? And so if you're going into a shopping center or a freestanding building or whoever it is, and you've got the greatest location in the world, if you don't have a landlord partner, you could have some challenges. It's maybe you don't. Maybe it all works out swimmingly. But I think interviewing, if I'm a tenant, I think interviewing a landlord, you don't hear about that very often, but interviewing your landlord is important. Now, if you have a big institutional landlord, you obviously can't go necessarily sit in the the corner office of the CEO in Wall Street, but their property management folks, their asset managers, the people that are on the ground, what kind of, how are they? What do the other tenants in that shopping center say about the landlord, right? That's a really critical thing, because it truly is a partnership, and COVID-19 happens, right? No one saw that coming. If you got the right landlord relationship, you've got a better chance of getting through an event, right? So I think you couldn't be more spot on. There's the relationship's important.
Yeah. Talking to other tenants, is this something that people don't typically do?
They don't. We deal with a lot of national restaurants in our portfolio, but we have what they call mom and pop, more local restaurants or small chains, and then the good ones who've been around the block a little bit definitely ask those questions. Now it's true, kind of more of a global macro, where we are in the cycle right now. It's probably more, at least in the Southeast, Southwest, I would say it's more of a landlord's market. Might not be the case in some parts of the Midwest or Northeast, but in the high growth Sunbelt, you would call that a landlord market. What does that mean? That means there's not as much space available. Vacancy is low, tough to get into the certain centers or certain places that you want to be if you're a restaurant or any retailer for that matter. And so with less space, that's more of a landlord's market. If there's more vacant space on the market, that's more of a tenant market. So it's so very possible that some tenants are coming in saying, hey, there's one spot left, I don't have time to do an interview, I got to jump on this space as fast as possible. And there's a certain logic to that. But if possible, making sure you at least know what you're getting into by trying to understand who the owner is, as much on a personal basis as you can, I think it's valuable.
Sentinel Grove has investments in how many different restaurant concepts now?
Well, 15 with one operator.
15 with one
15
operator.
with one operator. And then with our other friends, it was 3.
Yeah.
3 or 4.
Yeah.
So our first investment with an operator was in 2019, 6 months before COVID. And it was going well. And then February 2020 happened.
Yeah.
And the world shut down.
Yeah.
And to me, that was a true test of this operator and how they were able to respond to that. I mean, they basically were shut down for a year, ended up serving the community. The investors, were on the back burner. Everyone was, understood that, but they got through it and took that opportunity to actually to expand and thrive after that.
Yeah.
So
We
Yeah.
certainly see a lot of opportunities. We get a lot of people who knock on our door, and we're choosy, as you might expect, because there's a lot of people out there, a lot of concepts, a lot of money, and so we scour a lot. We've probably only invested in a handful of operators over the years. We love, our thank goodness the folks we've invested in. They've been great, and they're doing well. But we get pitched a lot, as you might imagine, and there's a vetting process you go through.
we probably get 5 or 6 inquiries a month.
5 or 6 a month.
Yeah, it's a bunch.
What are you looking for? I mean, when you go through that, like, let's talk about that. As you go through your due diligence, you do have a lot of concepts. There's a lot of money going into restaurants. There always has been. There always will be. You understand the real estate footprint really well, and where a concept might do well, and where there's a lot of competitive concepts, I imagine, which gives you a good leg up on understanding that. But talk about, like, what are the key metrics that you look for to help you decide this is one that we should pursue? Because if you are very choosy, wisely, then you probably have a pretty high success rate. You probably also have ones that maybe you've passed on that have been successful, but I'm curious
I
what
would say,
decision criteria you use.
yeah, Will, it's probably good to talk about the 2 types of structures that we favor. So first and foremost, we want the investors to get their money back. When you put money in, first priority, get your money back.
Yeah.
The Warren Buffett rule, right? Don't lose money. Rule number 2, remember rule number 1. Get your money back. Once you have your money back, you have no risk in it. So we've structured our deals as either debt deals, where we have a loan, and I think it's important for an operator to have a really good relationship with their local banker, and probably a couple bankers, because even established operators, the banks might need to see some track record before they'll lend, a significant amount of capital. And so we'll come in a lot of times with an operator and fill that gap where they need a mezzanine loan for a year and a half. We'll charge an interest rate on that. We'll have some collateral behind it. The investors get, regular consistent payment, but they fill the gap. Ultimately, they want to take those investors out with the bank financing. But I think that's really important for an operator. Maybe a lot of operators don't think about that, the importance of having that bank relationship. I know you do in your business. So that's kind of bucket number 1. Bucket number 2 is...
Well, let me stop you real quick.
Yeah.
Because banks often don't like restaurants for fair reason. I mean, there's a high failure rate in the industry. How do you go about finding the right bank and building that credibility and building trust with a bank? And what advice would you have to somebody who's going, yeah, I hear you, I want to have a good bank relationship, but none of them will talk to me?
You have an opinion on that, Trey?
When banks want to lend you money when you don't need it.
When you don't need it,
Yeah.
right, exactly.
Another old adage. How do you go about building? You're exactly right. A typical underwriting is going to look at your trailing 12 at your restaurant, and they'd love to have more than that. But I think in terms of how do you build a good relationship, this will sound silly, but you got to start. I think a lot of people, particularly the younger generation that's coming up, you're trying to establish some of these relationships online or, through social media. And obviously those are the modern ways of communicating, but the old fashioned walking into a bank branch, and sitting down with somebody and explaining and looking them in the eye and showing them your use case, and so they can see the passion that you have around your concept, it can't be understated. In terms of, okay, that's great, but how do you start that? Generally, you have a friend who has a banker, or you have a friend who banks over here, or your mom and dad banked at this bank. Start there. Start a warm introduction to a lender that from a friend or a relative is a great way to start.
It's still a relationship business.
It'll
big time.
Banking is, real estate is. I would argue almost every business is a relationship business, but it's extremely true. And I think one of the things that COVID taught everybody, there was a lot in our world, the retail real estate world, where they said branch banks are going to go away. It's all going to be done online, right? It's all over. And what we've seen is, other than the Wells Fargos and the Bank of Americas, the really large institutions that had too many branches, Just look around here in Charlotte, North Carolina. How many new bank branches have you seen pop up around here? It's incredible, right?
Well, I mean, there's a post office down there across from Waverly that was an old post office, and Chase is putting a branch in. And for the life of me, I don't understand, but clearly they know what they're doing. They're continuing to build bank branches to this day.
So it's all an outgrowth post COVID of how do I reach people and establish banking relationships. So you just said, how does a new restaurateur, how do you establish your first banking relationship? Or if you're young in your life cycle, how do you expand your banking relationship? Well, the only good news is the banks are doing everything they can to try and attract you to come in. So Chase's model, and I don't work for Chase, and I've done Chase real estate deals, and I'm just using them as an example, not because I have inside information, but when you look at what they're doing, they're not even 100% sure, I don't think, what they're going to do inside that branch, but they know they've got to be on the road, they've got to be prominent, they've got to be in your mind, right? So that's why you're seeing them come into
It's a
these
marketing
markets.
expense almost.
It's a billboard.
Yeah, it's a billboard
In a lot of ways. But look at Charlotte, right? You have PNC, Huntington Bank,
They're expanding here.
Fifth Third, TD Bank, right? All of these banks are just trying to get branches as fast as possible. What that means for your listeners is they're as excited about trying to get you in as you are, but you got to go in, and it's not something where you fill out an online form and send it to them. It's face to face. It's eye to eye. They got to see your passion. Do you have to have the numbers to back it up? Is a bank going to ask for some kind of collateral, just like we would as a private lender? Of course, but you can't understate the going in and looking somebody in the eye and trying to establish that relationship.
Gotcha.
In my opinion,
I think it's critical, and I would take it one step further and say you even want to have a couple of them that you have good relationships with, because there's just times where some banks don't have the appetite or the capital to invest in a restaurant
doubt.
concept, and I've just seen it firsthand with our partner that we work with exclusively, and they need to have 2 or 3 relationships, just depending on the timing and everything else. So
you've done 15 locations with this one partner.
yes,
Okay.
started with the one 6 months before COVID.
So the one, and now you're up to 15.
Yes.
Why has he been so successful? Because this has been a challenging few years for restaurant operators.
For sure.
And there are a lot of headwinds.
and you can probably that's your second bucket that you were referring to that goes right into that one
Yeah,
too.
the second bucket is a true equity investment. So an ownership, partial ownership for the investors, equity investments. And what we did, and I don't think it's terribly unique in the restaurant space, is my number one objective, and I should say our objective for our investors was to get your money back. It's just that's the number one goal of any investment. Don't lose money.
Yeah.
And we structured the equity arrangement to be where the equity investors get a disproportionate amount of the return of free cash flow in the beginning until they get paid back.
Mm-hmm.
Once they get paid back, then it splits to the favor of the owner, operator. And it's worked really well for us.
It's a popular structure. Like I said, I don't think we invented it, but if you're trying to, if you've got, members of your audience and you're trying to start a restaurant and you're figuring out how do I capitalize this, and your question is, what is the investor looking for? Derek's exactly right. We want the money back as quickly as possible. Why? That's de-risking, right? Even if everybody believes in everybody, the more the money that comes back, the best. That doesn't mean it has to happen in the first 10 minutes. Everybody understands that the first day that you open is the shakeout time, and it's going to take a little while for customers to come in. And no matter how, you got to work out the kinks. So it's not like we're banging on their door day 2 saying, "Where's our money?"
Right.
But at the same time, what the structure, when the investor gets a disproportionate share of their money back first, that de-risks, that validates the model, and then the incentive is okay. But when you do have your money back, now the restaurant owner earns more of the cash flow. So what does that do? That aligns the incentive between investor and restaurant owner, right? Yeah. You always want to make sure your incentives are aligned, and I think that structure has really worked really well. And this one local restaurateur that that we've done multiple deals with, he's been incredible, and the structure has really worked for both of us.
What is he doing well? Why has he been so successful?
I wanted to say the number one differentiator that we've learned is it's an operating company. So you better have a great operator. And
Yep.
you guys know Lori. Her dad was a restaurateur. She worked in the restaurant business since she was 7. It's a tough business, but it's all about the operator. And one thing that attracted us to this particular operator was he has on his staff, I don't know, 10, 11, 12 people that have been with him for 20 plus years, some 30. I mean, that speaks volumes.
Mhm.
You know, if someone's with you that long and that at that scale, they're doing something right. And so that's the number one thing we're looking for, these signs behind the curtain. Do you have a lot of turnover? Is there a lot of disruption? If you have that stability, that's a good sign.
Because no matter what, maybe this is true in all investing. It's certainly true in all private investing. You know, you're betting the jockey, not the horse.
Mm.
I mean, you have the greatest restaurant concept in the world, if it's an Italian concept or Thai or Indian, you know, or American, whatever the concept is. You're betting the jockey. You're betting the operator. You're betting their passion. You're betting their commitment. Right. That's you talked earlier about being discerning on who we invest with. It's about the jockey. It really is. You know, and it's in establishing that relationship and understanding what makes them tick and seeing all those intangibles. I mean, is it about ones and zeros and, you know, P&L? Of course, right? But you see a lot of P&L, you see a lot of spreadsheets. Who do you trust to get you from A to B? That's all it is.
Yeah, I mean, guys, that's such a huge. I'm a jockey
Of course.
guy as well,
Right.
and because the thing is,
I mean, you just showed all your listeners your flip phone that you're always available. If there's anything else that shows the passion, you know, of what you do, it's that you'll be available to anybody, anytime. You've always been that way. That is the most authentic thing about you. We've known that for years, and you're still doing it. And you're that's why you attract capital, you attract clients, you know. But it's all real. It's all genuine.
well, it's thank you, not necessary, but I appreciate that. But it is it would seem to me, and I don't know. I mean, like I'm a dollar cost average into the S&P. I don't know what I'm doing, like for investing. I know what I'm doing with my business, and that's where my real investment is. But I feel like people that, you know, it's interesting because you guys are like really good at the P&L, at the numbers, at like the metrics and the data and the financial aspect of this. But I'm glad to hear that you're thinking about more than that, because I think a lot of investments are done in black and white on numbers. But when you have the right person, that person is going to figure out how to get through a black swan event
Mm-hmm.
Exactly.
like
Our
COVID.
old
Like
favorite.
COVID.
Yep.
I mean, there are some that put them under, and no. I mean, listen, it probably would have put me under if I ran a restaurant. But the restaurant industry, and I think this is a really important point, and we talk about this a lot on the show, is there's no time where you're not having to pivot either in a very big way or even in a small way, because every aspect of the economy literally runs through restaurants. You're dealing with regulatory issues, rising labor prices, think about your food cost and
Oh, yeah.
oh well, beef's not going to come down for a few years now because we don't have enough cattle, and I'm sure this person probably has to deal with that. So it's just an ongoing constant, and you need somebody that you believe is going to figure out the things that you cannot predict are going to happen that are going to happen.
That's right.
That's a huge. This is why I never got into the business. Y'all know. I don't know if you know this. I mean, when I started this podcast in 2010, by the way, when nobody knew what the
Wow.
hell a podcast was, and
That was early.
I literally had to beg people to come on. Like, what is a podcast? Who cares? Who's going to listen?
Yeah.
But I started it in part because I thought I'm going to learn from the best, and then I'm going to start my own restaurant one day. I mean, I had a concept, ribs and whiskey. Like, I was like, this is what I'm going to do one day. It did not take me long to figure out, hell no.
Sounds like a great concept, though.
It would be pretty cool.
Yeah,
That is cool.
But I don't wanna
do
do
like,
it.
I do like both those things.
I offer that to anybody that wants
Yeah.
to do it. Like maybe you're like, please do it. It'd be a cool
Well,
place. But man, it takes a lot. So it really takes somebody that is able to manage so many different things with a cool head and to do that and to keep people on as long as this operator you're talking about has been able to do. I mean, that's
Well, and I think the test of that is if you start a concept and you grow it to 6, 10, 15, 20 units, can it run without you?
yes.
You know, and
That's right.
and that was a question that Trey and I had to ask ourselves a lot. You know, this guy is 69 years old. He's got a wonderful track record, but if he's not running it tomorrow, it's going to be fine. It's going to run itself because he's got the generals and the people in the field that can do it. And I think that's what we're looking for.
Succession planning. It's a great, talking about different attributes of what we're looking at it from an investment perspective. The vast majority of particularly independent restaurants, but even your franchisees, your franchise concepts, tend to be family oriented. You know,
Yeah.
and most of the time, a mom and a dad, and or husband and wife. You know, whatever it is. And okay, so the question is the kid coming into the business? Does the kid really want to be in the business, or is there an uncle? Is there a best friend? Right? I mean, every restaurateur has a story. Every small business has a story, right? It's not unique to restaurants. But yeah, succession planning, very important. You got to know what it is. Even if this isn't just for the older people. Even if you're young, what happens if the jockey gets hit by a bus?
Yep.
Right? And you have to go through that downside planning and having a good succession plan. What's going to happen to this restaurant if that happens?
I'll say, the group that we're talking about, and Trey joined us at one of these quarterly meetings. We have quarterly meetings where he's got key stakeholders, myself, us, as part of the equity and investing folks. He's got his operators, he's got his CFO, and we get together on a quarterly basis and really dive through the numbers. And you were impressed with that when you saw that?
For sure.
It was an hour and a half meeting.
For sure.
We talked about exactly what's going on in the business now, where the challenges, where the struggles. It's a whole template. I think just like any business, you have to plan and account for changes and contingencies along the way with your team.
As a landlord who has, I'm sure, quite a few different concepts across your properties and in your shopping centers and so forth, what are some of the headwinds right now that you're hearing from your tenants?
Well, when you have a landlord centric market, and again, this kind of talking from before, that's because so little new product has come on. So many, it doesn't seem like that. Sometimes when you drive around Charlotte and Raleigh and Nashville, or pick any of these Sunbelt cities where we kind of focus our time, you kind of say, wait a minute, I see all this building. What do you mean we don't have enough space? Well, the answer is when you have so many people reallocating to these, cities, you can't keep up. So the retail space in the aggregate has not kept up with demand, at least in these, Southeast, Southwest, Sunbelt areas. What does that mean? That means rents have gone up, right? When I moved to Charlotte 18 years ago, when we were in Ballantyne together, rents probably at that time were in the mid to high 20s. Maybe if it was a newer building on the street at a main corner, it was low 30s. Today, the average is probably in the mid to high 30s with some 50s out there, if not even higher in certain submarkets. Part of that's Charlotte becoming more of a major city, but part of that is just pure inflation.
Break that down. For what do you mean when you say the high 20s, the 30s,
Right.
50s?
So all retail real estate space is high 20s. What does that mean? $20 a foot. So if you have 1,000 square feet space that you're trying to lease, I would say 20 years ago, the average of that space would have been $25 a foot. 1,000 times 25.
Yeah.
Today, that same 1,000 square foot space is probably 40. Right. So we say biggest headwind number one is cost, right? Because a tenant comes into one of our shopping centers or any shopping center or a freestanding building or the ground floor of an office building, it's all the same. Whether it's rent or expenses being common area maintenance, taxes, and insurance, whether that's rolled into the lease, whether you pay it separately, in the end to the tenant, it doesn't matter. What they care about is What is the monthly check I have to write for operating expenses? That inflation over certainly the last 5 years, but over a longer period of time as well, is probably the biggest headwind for everybody.
Mm.
That is a significant challenge, rent inflation for tenants. Good for landlords, right? Landlords love more rent, but there are some aspects of inflation that don't help a landlord, right? If taxes go up, if property taxes go up, and you have to pass that on to the tenant, insurance costs go up, and you pass that on to the tenant, or landscaping, whatever the cost is, you can say, well, the tenant eventually pays it, so what do you care? But I know as well as anybody, the tenant only has so much checks they can write each month.
Yeah.
So if those expenses start inflating rapidly, I know at some point that means rent, which is my take home, is going to go down. So inflation, although there is a good side to being a landlord, expense inflation, which has really been a problem over the last, particularly 5 years, is probably still the biggest headwind today. Are there others? Lack of space, lack of available space for tenants. Sure. I think there are some. I think there's some interesting things out there that are compelling for tenants. But in terms of the biggest headwind for somebody starting their own restaurant is unless you happen to, your mom and dad own a building and you're populating it, right? If you're out there trying to go find your spot, rent is a headwind for sure.
You do a lot of shopping centers. I'm always curious, like, okay, like you do some Publix shopping centers. Is it, and maybe it depends on the concept, but do restaurants work well in a grocery store centered,
Yeah.
or do you need like a home goods centered one or whatever? And the reason I ask that is if I go to the grocery store, I'm going to get groceries. I don't know that I necessarily am going to be going and eating as well. But then I also think of it, there's a lot of traffic coming to these grocery stores all the time.
Yeah, it's the latter.
Yeah.
What we find is the number of restaurants. We could probably fill our entire shopping center's free space with restaurants if we could.
Yeah.
That's probably not a smart thing
Yeah.
because you'll burden your parking field and you'll have people cannibalizing each other, and right. So we're very thoughtful about what we call tenant mix, which is having the right numbers of restaurants and personal service and soft goods. Like, we're very thoughtful in our shopping centers and all of our projects on how do we create the best mix, not only for the tenant, but for us. How do you have the right combination of users? All restaurant users will usually create a substantial parking problem. And if you have inconvenient parking, that's not good for a restaurant. But in general, your question about grocery anchored, what grocery anchored does that I think so many retailers are attracted to, particularly restaurants, is the daily traffic. It is boots in the door every day. I mean, it's not whereas you might go to Costco once a month. Maybe if you're a big user of Costco, you go twice a month. A grocery store, there are many people who go every day, right? So the restaurant, even though you're kind of, well, wait a minute, you're going in to buy milk, eggs, and bread. Why do you want to go have a hamburger? It's the daily trip, right? Just how many boots can I get by my front door? How many eyeballs can I get on my sign? And Publix or Harris Teeter or Kroger, there's not just unique to Publix, but any grocery store is usually a high volume driver of that kind of foot traffic, which restaurants usually are attracted to.
And you're intentional about which types, right? The breakfast spot or the lunch or the dinner.
It's a deep,
You're
yeah,
not
different day
triple.
parts.
yeah. It's a deep
Different
dive on
parts
that,
of the
but I
day.
would, you really try when you have your restaurants. You like to have different, time concepts, right?
Mhm.
You don't want to put two breakfast concepts together. You don't want to put First Watch next to Starbucks,
Yeah.
next to Biscuit Belly,
Yeah.
right? You don't want to do that, right? That's gonna because everybody's there at the same time. What you really want to do is have your coffee shop, and then on the other end you want your burger place because
Yep.
burgers are more lunch and dinner. Coffee is predominantly breakfast, maybe a little bit of lunch, right? So we're very thoughtful about that. I think tenants appreciate it. I think savvy tenants ask those questions. I think savvy tenants are very keen. Like, hey, I want to come into your shopping center, Trey, but I'm a coffee shop and I want to make sure I want to make sure there's no other coffee shops. I'd really prefer not many other breakfast spots. And also, I really don't want you to put a gym next door to me because a gym's going to take all my parking in the morning and I'm a coffee guy, right?
Mm.
So there's a lot of I'd deep dive on that for hours. That'd probably take 3 podcasts, but
Yeah, but do you-
but tenant mix is important.
Do you have that conversation, like when somebody approaches you at the coffee shop? I mean, it behooves you to say, "Look, I don't know if this is going to work here because we got a gym and it's going to take all your because you don't I mean, obviously you need these or want these tenants to be successful.
We're all invested in success. Yeah.
Yeah. Okay.
Yeah. So we have those conversations. We deal with a lot of the national tenants have a lot of that embedded in their leases. So there's always something that I think you can learn from the restaurants that have been doing it a long time. I think that's certainly valuable. But yeah, no, we have those conversations, but incumbent on that, not every landlord does. And so if you found the best space and you're, the new restaurant, and all of a sudden, you don't have hey, wait, there's all this space next to me. What are you going to do with it? Well, don't worry about it. That's one of those things in a lease where you say, you know what, I'm going to make sure I'm going to write it down in my lease. Don't put a gym next to me. And I want to be the only breakfast concept, or at least in this area, I want to be the only, those are the things that, you got to hopefully, you get a good attorney and you get a good broker who knows the lay of the land. There's lots of good ones out there. Don't go it alone. Get some help, because those conversations are really important.
What about concepts that haven't worked, where you've had somebody that it just didn't work out? Like, what are some of the things that you've noticed are there common threads with ones that haven't? It may be just that I don't know, like the cupcake thing happened for a while and then it kind of went away or whatever.
Yeah, that's interesting. I wouldn't say I've seen necessarily a segment of restaurants fail. What I would tell you, the biggest predictor of success is engagement, 100%.
What do you mean?
Engagement of your business. So where I find that the restaurants that I've seen fail at least at our centers, and obviously we're kind of connected with a lot of different landlords, is when you have somebody who has bought a franchise and they are not really prepared to be in there running it every day, but they've invested in it, and they have a buddy who's going to manage it, or a kid who's going to manage it, or a parent who's going to manage it, and they're kind of half in, right? It's an investment. I kind of want to tell my friends I'm a restaurant owner, whereas I'm sure all of your restaurant owner clients are kind of rolling their eyes at that.
It happens.
Oh no, I mean, I'm rolling their eyes that they know the story. But I'll give you an example. We had a franchise concept of one of our shopping centers in Fort Lauderdale, Florida, who literally just folded 2 weeks ago. And what happened? They were kind of half in it. They weren't going to the local high school across the street passing out coupons. They weren't, whatever their marketing was. And so what happens? Sales decline. Then what do? Then they cut expenses. Then sales decline. Then they cut expenses again. Then they stop engagement because they don't have the money to engage. What do we call that? The death spiral. And then, of course, it ends at the end. So, I wish effort was always a winner. Obviously, we know it's not. There are factors beyond your control. But I would tell you that, engagement in your business, if we had a restaurant coming in, I don't care if it's the best restaurant concept in the country, and someone was passive about it, or, hey, yeah, we're going to own this, and my friend's going to run it, and the answer is no thank you, because it's just such a predictor of failure.
I mean, to that point, that's what we talked about earlier with great operators. We're putting together a program for this operator that we work with a employee benefit program, employee ownership program for the key employees.
Yes.
These folks that have been there 20 plus years, where everyone's got some upside, some skin in the game, and everyone's fully engaged, like Trey said, and they don't take their
not an ESOP, but a way
ESOP
for
light,
them.
something similar to that.
Interesting.
Yeah.
Is this something
We're helping them with that.
Okay.
Helping them set up. Publix, back to Publix, is the
Uh-huh.
largest ESOP, it's certainly in the country, might be in the world.
Yeah.
And so you talk about why their customer service is so legendary. I brag on them because they're one of our favorite clients. But if someone's mopping the floor in a Publix and you ask them where the cake mix is, they're not going to tell you aisle 14. They're going to walk you to aisle 14 and show you where it is.
Yeah.
And that's because everybody down to the bag boy and the janitor and up to the CEO suite, I mean, there's no difference, right? They're all stockholders. They all believe in it. They all own it. And I don't think you can underestimate how powerful that is, particularly from a customer service perspective.
Well, I go to Publix every day.
I know you do.
Which one?
Marvin Gardens.
Marvin.
And the reason I was asking you about because this is just probably wrong concept or not enough engagement. I mean, there's one restaurant that's been there kind of since day one, Mexican restaurant, does well. But there's been other ones that have come into a couple of these spaces, and they come, and then 6 months later they're gone.
Yeah.
And I don't know if that one has enough traffic yet. They're still building out that center. But I got to tell you, yeah, my family laughs at me, dude. Like I go to Publix every single day.
Every day.
Like if there's anything, like if we need like literally like a quart of milk, I'm like, I'll go. And the reason I go is because,
You're kind of proving my point about daily trips, by the way.
oh yeah, for sure. And I mean, I'm like I am with everything. I'm extreme and I'm an outlier. I get it. But like, I like the experience. And I think that we don't have enough daily memorable experiences in our culture today because so much technology has been deployed and so little emphasis has been put on people that when I go to Publix, I notice the difference. And there's people, I've got a buddy his family was involved with Publix early on. They own a bunch of public stock. And he's like, dude, there are people that work in the deli counter for 30 years and retire with like $7 million in public stock.
It's all true.
Everyone's
And
kind of they're rowing the same way.
they're all rowing the same way.
You know, I started as a bag boy at Publix.
Did you really?
Yeah.
Well, I got to tell you,
14.
I'm angling hard to get Brooks, who y'all know, my 16-year-old son. I want him to work at Publix this summer. Like,
It's a great company.
it's a great
Well,
company.
yeah.
It is.
People interaction is great.
But I think
But
experience.
but to your point, like when you that's a unique model. Getting employees engaged as owners changes the game.
It's a mind shift.
Mm-hmm.
and experience, right? You're more invested. And I think this is extremely true in restaurants, right? What are the good restaurants? Is it great food? Sure, but it's experience, and that's particularly true in the younger generations that are coming up. They value experience more than Rolexes, more than whatever the hot car is. That generation values experience so much more. Partly probably why restaurants are flourishing, right? And the good ones are the ones that create that experience. And I don't think that's Publix is the same way, but experience is critical.
On the flip side of that, and you would agree with this, the amount of pride of ownership from our investors, it might be a very small portion of their net worth or portfolio, but when they say that they own a piece of this restaurant, there's so much pride of ownership, and I think your listeners should know that.
Yeah.
Right.
They go in and it's their restaurant.
Yeah.
Well, it is, for a small portion.
Yeah.
And they love that. And
they love that.
And they're invested, and they you find the right investor base, and maybe this is true in any concept, but particularly restaurants, I think Derek's exactly right. It's again, you don't generally have somebody putting all of their net worth in an investment like this, but when they walk in the door and they see the proprietor and they know they're part of it. Like, man, there's an intangible element that I don't think you can calculate on.
Trey,
they love it.
We've been to birthday parties, we've been to charity events at these restaurants that they're invested in, and there's just so much pride of ownership.
Yeah.
We do a lot of different types of investment. We may not touch, see, or feel any of them, but this is the cool thing about this sector is you can touch it, see it, feel it, taste it. There's nothing else like it.
It brings up a really good point. You all are managing money for people where this is a small part of their overall portfolio often. One of the things I've learned about restaurants is the flip side of this is you have to be careful who you let invest. And a lot of times restaurant owners are like, I need that check. I need the money. You wind up, you're marrying, in some ways, your investors. And if you're not careful and you're myopic and you just need the money now, you wind up with an investor who thinks they own the restaurant and is like, that's my table or that's my, and they act like an owner in the sense of like ordering people around or being a cancer in the culture. And I mean, it happens. I've had plenty of people on this podcast that have talked about that. So I think it's an important thing to really understand. Again, the same with the site selection, your investors, everybody when you're starting a business or you're growing, like you just want to do it. And there's so many things involved. You're like, I just need to get this done. But you've got to take your time and do your due diligence, understand who that investor is and what their intentions are and know that you can trust them, that yes, they are an owner of this business, but they're doing it for pride, not for, being able to say I'm the owner and I want, this and I want that and things like that. Because it
And
happens
going
and it can,
friends and family, right? I mean,
yeah,
that's probably most people's logical bucket.
yeah,
But shoot, you lose money for friends and family, and you're gonna have Thanksgiving dinner and pass me the turkey, and where's my $50,000 investment?
yeah,
Yeah.
Like
And
you don't want it to ruin relationships, hurt
no,
relationships
and,
either.
and we don't manage money, we manage investments. But to your point, and I think Derek really hit on this earlier. We talked about interviewing your landlord, interviewing your investor. In these, or we talked about banking relationships. At the end of the day, is like you say, you got an idea and your hair's on fire and you just want to get opened, and you can get really myopic. Great word. And get the blinders on. Like, hey, whatever I got to do to beg, borrow, and steal to get to the finish line. So important. Have those relationships. Make sure having the smart relationship money that's coming with you. Good banking relationship. Good investor. Right. So important, because if you don't have it, you might open, you might get it started, but you will not be prepared for when it will. What is that famous Rumsfeld quote, or Tyson, right? Everyone's got a battle plan until they get punched in the
till you
face.
get punched in the face.
But when you get
yeah.
punched in the face, it's who's around you, who's there to support, who's there to bounce ideas off of, who's there to call a friend to ask for a favor of this issue, right? So important.
And the other thing I'll say is, anytime you take money from somebody, you should really talk to a securities attorney that can help structure it the right way, because there's all kinds of rules and regulations around that. We've learned that. We spent a lot of time on that. And anytime you take money from somebody, you should have good representation,
No
somebody
question.
to help you with that.
Yeah.
To make sure that you're following the rules.
Good operating agreement, good lawyer, very important.
There's just rules around who even qualifies. The accredited
Accredited investors.
accredited investors, and
Yep.
you don't want to get tripped up on something.
Yeah. What are some of the what are some segments of the restaurant business? Like we talked earlier about the breakfast space, very competitive. A lot of concepts in that space right now. Looking forward, are there concepts that you are excited about, that you're starting to see, that you think have a lot of growth opportunity?
What I think is really great about American capitalism in general is the creative destruction that goes on. I remember not too long ago when someone said it's Chick-fil-A's figured out fried chicken, and they're so dominant they'll never be anybody else. And now then you see Raising Cane's, Dave's Hot Chicken, right? The great thing is that what's happened, all of a sudden Chick-fil-A, to their credit, realized that where fried chicken in general was an afterthought on a burger menu, they came out and said, no, we can put a whole concept around this. It seems, as you sit here today, it seems inevitable. But back then, that was a pretty big step forward, right? To have a whole, because it wasn't, there were KFCs and there were people who sold buckets of chicken, but for someone to just sell fried chicken sandwiches, that's just one thing you have in a menu. That'll never work. Obviously, we know that's a different story. But then everyone said, well, now they'll be the only one. And so now, and of course, that's not true either. Now you've got people, Nashville Hot Chicken, and you've got all these people trying to do different things. And now you're seeing growth in some areas, and some won't work, right? And some will fold. So I love the creative destruction in the industry. What am I really excited about? I could give you 10 different concepts that I think are really pulling through. But what I would say in general is experience concepts and customer service. Experience and customer service are coming back in vogue. Earlier in my career, when you looked at some of the restaurants, it was more focused on convenience. How quickly do I get you through a drive-through? Right, time. Right, I'm driving. I'm commuting in a car. I'm going to be there long. I want to be able to go through a drive-through. Adding a drive-through is the most important thing. Today, I think the most exciting concepts that are up and coming have a really good, tight model. They're not trying to be all things to all people. They're not trying to be Cheesecake Factory, trying to have, that's a really unique bird, and they do it well, but they're the only ones who do it well. Having a menu with 50 things on it, 75 things on it, you're not seeing as much of that today, right? So you have these really kind of tight, interesting concepts, really focused on experience, really focused on, being customer centric. I'm really excited about that. It's a great change. I like to eat that way. I like to experience that way.
Yeah.
So, there's a lot of great ones. A lot of really good local guys here in Charlotte or
Mhm.
these other cities that we're at, guys and girls. It's really exciting to see. But there is such growth in almost every segment of the business. So let's talk about, marijuana Rani and Bodhiwala and Chai Pani.
Yeah.
Indian food. There was this kind of stigma that, hey, that'll Americans will never really embrace Indian food. That'll never be the case. Yeah, there'll be a couple of curry spots maybe in Washington D.C. and New York. Now you have Marijuana Rani at Chai Pani bringing it to Asheville and Atlanta and just opened in Washington D.C. and here in Charlotte as well. And you have this just hunger for that concept. So I mean, I'm as
Indian
excited about the space.
Indian street food.
Indian street food, right? That'll
Yeah.
never
Yeah.
work. That'll never work. That'll never catch on.
Yeah.
But talk about the jockey. This is a jockey who takes his team to India takes a bunch of people to India every year. That's a huge investment, like full in, all in, does everything for his team, for his customers, for his communities, like is a jockey that you go, I don't know what he's going to do, but I think he's going to figure this out. I've always felt like that about marijuana.
We had somebody give us a book, Radical Hospitality. Isn't that what it's called?
Yeah.
Extreme Hospitality is
Yeah.
every one of your
Unreasonable hospitality?
Unreasonable hospitality.
Will
unreasonable.
Guidara.
Yeah, great
Unreasonable.
book.
So somebody gave it to Trey and I read it. I think you've read it.
Yeah.
It's good for any business, but for the restaurant business, it's incredible. That's essentially what separates the great jockeys from everybody else, in our opinion.
And he's one of the. I mean, we brag on him. We both know him, obviously. He's you'd absolutely have a class taught by him on that topic. On terms of how do you build relationships? The level of engagement he has with not only the at all levels of his business is really incredible. And I think that's what it takes. That's what it takes to be successful. There's no question about it.
Marijuana has been on this podcast a couple times, and one of the things that before that book came out, their term, and it may still be, was mind-blowing hospitality.
Mhm.
Like that was what they were like, just something that would just blow your mind that you just are not expecting. But that's it, guys. Like, and you're right. That book, it should be deployed in any industry. In fact, I think y'all know. Well, I won't say his name, but one of our friends, his wife works in a doctor's office, and he called me a couple months ago. And he's like, "Hey, my wife's reading this book, and it just seems like the way you run Schedulefly. It's called Unreasonable Hospitality. Have you ever heard of it?" I'm like, "Yeah, dude, I've definitely heard of that book. Why is she reading it?" "Oh, well, their whole doctor's office is reading it." And I was like, "Okay,
Yeah.
that's good." Like now, Will is like that guy's speaking it like
It's good
he
for
speaks
any
to
customer
any
service
customer-
business.
Fortune
Any customer
500
service.
businesses now, and like that concept is just kind of blown up. Fortunately, we need
Yeah,
it. Like
we need it.
we need it. It's
Employees, your customers, your vendors, your bankers. All that's essentially what we're talking about here.
Yeah.
These relationships.
again, there is a lot of tech. We have tech, but there needs to be just enough. But restaurant business, and I would argue any business, but we'll stay on restaurants. It's always going to be a people business. Now, will McDonald's have a bunch of people in the back one day? Probably not. And they're probably going to have one person operating a bunch of robot. Like, fine, but like the majority, that's one extreme. But the types of places you're talking about, the types of places that listen to this podcast, it is a people-centric business. Always has been, always will be. And I know the second largest Bojangles franchisee, they know their labor costs, but they're not locked in on that. They're locked in on, let's pay people really well, and let's treat them really well, and let's validate them, and let's invest in them and give them opportunities to grow. Therefore, they will turn over at a much, much, much lower rate. And when you've got that level of commitment, I mean, turnover is a beast, right?
Mhm.
Like it's huge for the
It's a
industry.
killer.
It's expensive. It just drains culture. It costs a lot of money with all that kind of stuff. So that's and this guy's the second largest Bojangles franchisee, and he's probably worth billions. Like I mean, like because of people. It's
Mhm.
about people. People at the top, people on the team, people that are investors, people
Right.
that are landlords. It really is a people business.
No question. And even if you have a restaurant that's doing a lot of a big takeaway business or a big DoorDash business, generally it started because when they're at their first experience in the restaurant, then they got established, then they enjoyed it, and then they take the food away.
But even in that case where you might not have a big team of people, there's still, if it's a small number of people, if they're bought in, intentional, present, engaged, smiling, it makes a difference.
No question.
You can market any concept and get people to come in once or to buy once, but like, do they come back? That's the magic
That's it.
sauce for
That's right.
restaurants, right? And
Yep.
and people are just a huge part of that. Well, I'm glad. So good. I'm glad you mentioned marijuana and Bodiwala. Bodiwala is I'm interested to see what happens with that concept. But I
Yeah.
do think Indian street food is it's not many places have that. That is a concept that we're seeing a little bit more of. I'm seeing bagels.
Yeah.
Mm-hmm.
Bagels are having a moment.
Yeah. Yeah.
Like a lot of different. I mean, there's pop-up bagels, and
Yeah.
we had a guy who started a Jeff's Bagel Run. He came on here. Barry Bagels up in Cleveland. What I don't know what's going on with bagels. Do you?
Well, I think that you've got some of that is get back to here we are in the Sunbelt. Some of that's a supply and demand. We did not have a lot of that concept here. It's not like when you go to New York, there's a bagel shop and a deli on every corner. But as we've had more people move from the Northeast here, right
Yeah.
now the demand for that product goes up. Then all of a sudden it's here. Then the people who didn't experience we want that too. Right. So some of that I think is a reallocation, but no different than the example I gave you about Chick-fil-A that then pops out all these other competitors. You're just, people are looking for the next big thing, right? So if they perceive a void, they're going to attack it. Good entrepreneurs are going to attack it. I think look at the growth in pizza. Right. I mean, you kind of had your takeout pizza, and you had some red, white, checkered tablecloth mom and pop concepts. Now, how many new dedicated pizza
Mm-hmm.
concepts have come on? I mean, phenomenal.
Just here in Charlotte.
Just here in
Yeah.
Charlotte, right? I mean
Yeah.
and so you're
nationally ranked.
nationally ranked. That's again back to the beauty of American capitalism. Everybody sees, once they see something, they're trying to create their spin on it, and then when someone has success on it, everybody else tries to create their spin on it too. And then when it's all done, there'll be somebody, some people who are standing when it's over.
Yeah.
That's the exciting part.
Have are y'all familiar with Jet's Pizza?
Mm-hmm.
I've got to try that place because they have these ads. I think it's freaking hilarious. It's my favorite ad I think I've seen in a long time, and it just says, "It's like our pizza is better because it has to be," because nobody knows about it.
right.
I think that's awesome. Yeah. Well, Sunbelt, and you're primarily southeastern states. But I mean, isn't this where southeast, southwest, like this is where the demographics are like
largest migration of population in our country's history.
Yeah.
Out of California, Northeast, Midwest.
Yeah.
I mean, they're coming Virginia down to Florida over to Texas.
Yeah.
I used to say our focus was the ACC and the SEC, but that doesn't seem to hold much anymore with
Oklahoma,
where conference realignments in Palo
Stanford.
Alto. And yeah.
So,
but no, we've been focused for, at least the past, almost 20 years on the Southeast, a little bit in the Southwest. We've had a presence in Phoenix and a couple, one-off projects in, Ohio and Kentucky. But really our core markets have always been Texas, Florida, Georgia, the Carolinas, Virginia, and Maryland, DC.
You'd say, if you agree or not, I think Virginia, South Carolina, North Carolina are some of the best markets in the world.
No question.
Maybe
for real estate.
Yeah.
Or just
for real estate in particular.
Yeah.
But that could also include restaurants and all the things that go along with it.
Yeah.
No question about it.
Well, if it's good for real estate, then the economy could follow. Yeah,
it's related.
I think if you were a restaurateur 30 years ago, and you had a concept, you were packing up your bag and you're moving to New York, right? Because if I can make it in New York, I can make it anywhere. I think what's really interesting, and you kind of brought it up on on the bagel shops that are popping up here, is there's now people who are saying, wait a minute, to be successful, I need to be established in the South or the Southwest, Southeast, Southwest.
Yeah.
That's where the restaurants want to serve, where the people are, and that's where a lot of people certainly are and are moving. So it's exciting.
Charleston's an interesting place because it's very competitive, but I started thinking about this with like Chase's idea of putting branches out there because it's almost like a billboard, it's marketing. I had somebody talk to me about the importance of being in Charleston for their brand because there is so much travel there and people come from literally all over the country, all over the world to go there. And so when you have a good presence there, you're able to, in other words, like I've always thought, how do you take a concept that is in one place? And I would just think you would just grow in concentric circles out because your brand. But what they were saying is we can put our Charleston concept, we can put in Ohio, but people know because they've been in Charleston.
That's right. No question about it. Yeah, the tourist markets, Charleston is obviously one of them. You can down where I'm from, down in Miami. What's happened in the Miami food scene over the last certainly 5 but 10 years it's incredible. The best restaurants in the world now. Again, it used to be New York, LA, Chicago, right? It's just no longer that. There's such great. Raleigh has a great food scene. Charleston has a great food scene. Atlanta's got a great food scene. Yeah, I could, Texas. Dallas, Austin, San Antonio's got an amazing food scene. So you're just as population is kind of reallocating these areas, you're getting these really great restaurants almost in all of these places.
Yeah.
So it's freeing in some respects. You've got such a great canvas to pick from. But if you can make it, if you've got a shot and you start a restaurant in Charlotte and you hit it here, all of a sudden it wouldn't be a surprise at all that you then hit Raleigh and Atlanta and Nashville and Jacksonville, right? And then you just start going through all these similar places where people are now so interconnected down here.
Yep. Talk about, I'm very interested, particularly in your thoughts, Derek, but both of y'all about just the economy in general, where we are, where we're going, what's going on with rates. I mean, depending on where you get your news or what information you follow, things are going really well, and 2026 is going to be awesome. Or we're in a.
Is this about to be Rogan's podcast? Is that what's going to happen?
We talk about everything on here, but it's important because people are thinking about it, especially when they're running restaurants and they're thinking about like, is the consumer going to be able to keep spending money? Are we living off of debt? Are we in a K-shaped recovery where everybody with assets does well and everybody else doesn't? So I'm just high level macro curious of your thoughts on that.
I'll start. I think just real macro level, we're pushing $40 trillion in debt in this country.
Yeah.
And a vast majority of that has been taken on over the last few years.
Yeah.
And that's one reason why you've seen inflation ramp up, maybe sticky. Trey's buildings cost more, so the rents go up and the food costs go up. It's all very interrelated. No idea how we're going to solve $40 trillion in debt and adding to it every year. But I think, unfortunately, there is, the middle is getting squeezed. The lower end's definitely not thriving. But I hate to say this, but the upper end, people that own assets and are doing well, they're doing well right now. I don't know they see some of the hard times that are out there as much as, our friends in the middle class. And I think you have to respond to that, as a restaurateur, and offer different things that allow them to participate.
Yeah.
Well, that's the thing is like if the masses, eventually that
you're going to run out of.
Yeah.
I actually meant to bring this in. I heard this yesterday or 2 days ago, but it was a report on restaurants, and it said the growth in appetizers, people ordering appetizers over the last year is up 25%. People ordering entrees and desserts is down. I don't remember the percentage it was down, but it'd be an interesting thing. If I could find the report, I'll send it to you. You could put it in your show notes. But that trend is very telling. What is that? I still want to go to the place that I want to be at. I still want to see the people I want to be. I want to have the waiter who I love, the waitress who I love. Right. I still want to be there. But I'm just going to grab an appetizer, right, and a drink.
Yeah.
And so my ticket's going to be less, but I still get to go to the same place. I'm not going to order dessert because I don't have that kind of that I don't have that disposable right now, but I still want to go. So that I think is really telling. Again, back to people valuing experiences, and particularly the younger people really value experiences. They're still wanting to go out. They still want to be social. They still want to meet their friends out, but they're trading down on their ticket. So I think that kind of
Yeah.
supports what you're saying.
And you're seeing liquor sales are down huge. It was
Mhm.
$20, $22 to get a drink, liquor
Yeah.
drink. You know, dive bar now is $10, $15.
Yeah.
I think
Well,
it's squeezing people.
yeah, I talked to
That's what people say. Oh, it's the younger people are giving up alcohol. I'm like, it's just become too expensive. It's not
expensive.
because anybody's found
you
religion
know
on
what?
alcohol.
I'll tell you what a
Right.
problem is right now.
Right.
Like legit problem is, I know this. There's a restaurant owner that I don't know if I should say his name or not, but does a very good job with his business, and a lot of it is alcohol sales. And this is in a college town. You know what college boys are doing right now? They're on their phones gambling, and they're losing
Mhm.
money,
Wow.
and they don't have money to go out.
Yeah, it's a problem.
It's a definite problem. I mean,
That
that's
is
a problem.
It's not just at college. It's high school too.
Yeah,
yeah, it's everywhere.
that's a problem.
I'm so thankful my kids are not into that stuff. But that's I
Yeah.
mean, these
Yeah,
are
but yeah.
real
Yep,
issues.
yep.
Like, what do you do
Right.
if you own a restaurant and a lot of your sales are from liquor, and there's a trend down? Just there is like more of this health conscious, alcohol is poison, I'm not going to have alcohol anymore, blah blah. You know, there's that, not blah blah. Like, I mean, that's an important thing, but it is a trend. And then you also have, you know, the younger demographic that might still want to go out and party, but they don't have the money because they're gambling. Like,
Right.
then what do you do? This is where you have to have the right jockey. Oh, people are putting more into appetizers, and you have to pivot and have to adjust. And this is why it does take the right jockey, and it does take somebody that's willing to be creative and willing to be just dialed in and aware and like fully bought in, so that because it's just a constant pivot.
Have you noticed a trend? Because he and I have been out to business dinners or nicer places, and we see tables of women, we see tables of men, young, and they're not necessarily together, but they're just isolated, separate from each other. I don't remember that being a thing as much as it has been lately.
Well,
know.
because
Interesting trend.
You know what I mean? Is that part of that whole social
It's-
media? And
it's because they don't know how to. Yeah, dude. yeah, it's a thing. All right. Well, we will.
This has been a lot of fun, man.
We'll
Thanks
wrap
a
this
lot.
up. Yeah.
I really enjoyed it.
a lot of fun.
Really enjoyed it. Proud of what you've done and where you've taken
You're a
this
pioneer,
company.
man.
Yeah, I mean, this is great.
Well, thank you all for
taking
taking the time. I mean, this is awesome, and this is really helpful. And maybe we'll do this like once a year or something like that.
I love it.
Highly educational. All right. Thank you all for watching. Thank you for listening. I'm going to ask everybody in this room to do this. So we're going to at least get 4 of these. And then always ask our audience to do this. Apple Podcasts, Spotify, wherever you listen to podcasts, open that app up, give us a 5-star rating, and it just takes a second. But that is how the algorithms decide what content to put out there. And this is awesome freaking content. So give it a rating so that more people hear this stuff. And thank you all very much. More episodes coming soon. See you.